Hey there, I'm Taz, and if you're feeling overwhelmed by the market right now, don't worry, I'm here to help you make sense of it all and give you the tools you need to navigate this chaos like a pro. The global economic landscape is in flux, with ongoing shifts in trade relations fueling uncertainty. This uncertainty has led to heightened volatility in both the US Treasury and equity markets. In the face of these challenges, Bitcoin has experienced its largest drawdown of the current cycle. But despite this, it remains within the typical bounds of corrections seen in previous bull markets. Notably, Bitcoin's median drawdown is far smaller than in past cycles, reflecting a more resilient demand profile. Let's dive deeper into the key trends. Macroeconomic uncertainty is pervasive, driven by efforts to restructure global trade. The US Treasury market, the cornerstone of the financial system, has been especially volatile. Treasury yields surged from an initial drop of 3.7% to 4.5%, causing major disruptions in the bond market. This volatility is measurable through the MOVE index, which shows extreme stress in the bond market as investors react to uncertainty. Similar turbulence is evident in US equity markets, where the VIX index, which measures market volatility, is now showing levels comparable to major crises like the 2008 financial meltdown and the 2020 COVID crash. As investor capital pulls back, liquidity tightens, and digital assets like Bitcoin, being highly liquidity sensitive, are swept up in this broader market sell-off. While traditional safe haven assets like gold are thriving, reaching new all-time highs, Bitcoin has shown resilience. After initially dipping to $75,000 and successfully testing the 30-week smooth moving average on the weekly chart, Bitcoin regained momentum and stabilized around $85,000, signaling resilience amid global uncertainty. But following a major institutional trade on April 7th, 2025, where 750,000 shares of GBTC were quietly scooped up at $61.95, Bitcoin has since surged to approximately $91,000. That trade was executed at a 13% discount to NAV, with Bitcoin closing at around $79,000 that day, a strong signal of institutional conviction and growing confidence in BTC's upside trajectory. Gold and Bitcoin are becoming increasingly prominent as neutral reserve assets, central to the shifting global financial landscape. Despite recent volatility, Bitcoin has remained within the $85,000 range, even as it faced its largest drawdown of the 2023-2025 cycle, with a 33% pullback from its all-time high. Historically, Bitcoin has seen deeper sell-offs in similar circumstances, but this cycle's drawdowns have been relatively shallow, suggesting a more robust investor sentiment. Liquidity in the digital asset ecosystem continues to tighten, with slower growth in capital inflows. Despite this, the realized cap of Bitcoin remains at an all-time high, though its growth rate has slowed to just 0.9% per month. Investors are showing more caution, indicating a prevailing risk-off sentiment. Most of the unrealized losses in Bitcoin are concentrated among newer investors, while long-term holders remain largely in profit. The realized cap held in loss has reached an all-time high, but individual losses remain less severe compared to previous bear markets like those in 2021 and 2022. To conclude, the macroeconomic backdrop remains uncertain, with Bitcoin and gold standing out as resilient assets amidst the volatility. Bitcoin's drawdowns, while notable, are within the normal range for bull markets, and experienced investors are largely in profit. This ongoing trend may signal a shift in investor sentiment, with long-term holders poised to weather these uncertain times. Thanks for watching. If you're ready to take your trading to the next level and join a community that decodes market moves like the pros, head over to www.expertrady.com. Let's stop guessing, start making smarter moves, and trade with the institutions, not against them. See you on the inside.